Hello and welcome to the Friday wrap up here on Landy's Crypto Corner. Today is, well, it's still February 28th, 2025, but it's actually March 1st of 2025 for Bitcoin as the Saturday candle is open. We had a monthly close and Bitcoin has closed slightly above, and is trading slightly above the 1 month upper first standard deviation away from the basis band. Of course, this is a major level of interest for volatility. It is now sitting at $84,500. So Bitcoin trading above there to around $85,000 right now, which is one of the kind of bull emergency levels that was lost as Bitcoin did head down and hit some of our downside targets that we had talked about below 85, basically mid to low 80s. Anywhere below there, we're looking mid to upper 70s. We hit 78, but kind of oscillating around that key level of $80,000, which was essentially where the upper first was last month. We did have the monthly low for February coming in at 78,167. So we did meet the criteria for that initial move down. We'll take a look at the weekly here in a moment. As it is important to understand what we want to see for closes in the weekly from here, as we work our way down the time frames to the daily. Now, for the monthly, this is now a high. This is not just a high, though it is a higher high, but this higher high does come with a little bit of bearish divergence that is now locked in on the monthly. We have seen the initial target already hit. So the bearish divergence has already played out on the close. We'll talk about secondary downside targets. Should we get continuation for this single drive of bearish divergence within the context of this uptrending structure for RSI and the uptrending move for price action? Let's note a few key areas for RSI here real quick. Bullish control zone, edge of it is at 82,369. Nice. And the critical zone above, that is the 80 read up here, is going to be at $169,000. Nice. So we're getting our 69 meme numbers in. And let's look at the user alert level up here, just so we know where that is. That's at $230,000. And we'll look at a few other things. If we did lose the bullish control zone, or the edge of the bullish control zone, we have the midline down here. Midline is going to be at 59,200. This is going to be kind of important. We're going to talk about this number right around $60,000. Where is the bearish control zone? Well, it's all the way down here. And the bearish control zone, or the edge of it, is at $20,000. I do not see that as a viable target, obviously. Not from here. Bitcoin's still in an uptrend. So let's talk about that for just a moment. Bitcoin is in higher low structure. We have higher high, higher low, higher high, higher low, and now we have another higher high. Bitcoin is still in a bit of price contraction, as it has been kind of knocking around the upper first to upper second more recently here. And if it is going to head down to the basis, where is that basis? That is right around 62,600. If Bitcoin does start to break down towards that basis band, this will likely update to around $60,000 if it is in this monthly candle that is open right now. Other than that, it's still a bull market. This is a pretty big correction. Yes, it is the most volatile February. It's one of the most volatile monthlies that we've seen in a very long time. And it's the most volatile monthly that we have seen in this entire run-up. That all of that is true. But when looking at it on a monthly scale, this is just an uptrend. And until this uptrend is broken, well, then we're not really looking at this as being bearish. Right? The last higher low is down here at $49,000. Now, if Bitcoin did break down from there, that would be pretty bearish because it'd be losing some key levels. It would be trading below $49,000. I'm going to show you why I don't think that is a place to look, at least right now. it would be losing this high side area over here if it broke down below there, so on and so forth. That would be a structural change, is what I'm trying to point out here. Is that would be a lower low, right? Then you look for either equal highs or failures to close above this high up here. Equal high, lower high, a swing of the highs but close lower, and then you look for another higher low to break down from there. So it's either going to be lower low and then lower high, or we're looking for a higher low and then a lower high, equal high kind of failure. Kind of like how we saw a higher low over here. In 2021, we had the big sell-off in March coming into April. Then the big May dump off candle to a higher low, as it related to this last little higher low down here at right around $9,800. And then we got a higher high, but a lower high close and a failure to move on. That then resulted in, the attempt for another higher low that turned into a lower high. So that was, where things started to get nasty. Breaking trend was essentially breaking down below this guy. Could have tried to save it over here, but nope, it nuked down into the bear market. So we do have to be aware of possible structural changes now that we do have a higher high again on Bitcoin. But until we see either a higher low that is put in, or a lower low that is put in, we're not really concerned at this particular moment about structure and the integrity of this bull market. So let's look at a few other things. We do have momentum at extremes here and coming down. There's a bit of momentum divergence to go along with that bearish divergence. I'm not that concerned about it right now, to be quite honest. Like I said, I'm going off of the structure still being bullish. And I'm going to show you why $49,000 just is not a viable target right now. Right now. That's the key word. We'll monitor things throughout this month and see how things go into, the end of the first quarter into second quarter. And you might remember last year, I talked a lot about we need to watch the first to second quarter transition, especially after the election. We need to see how things go, right? So this is not completely unexpected by myself and for those watching my content here. We've been kind of talking about this for a while. 101,800 would cross momentum back to the upside. 101,800 would also, if we got this candle this month come back up, that would look pretty damn good. 101,800 put above this close open here and headed up towards the actual all-time high close up here, which is right around, is it 102,411? Yes, so it's a slight little difference between the close open there, but it's about 102, 102.5 or so, as right around the all-time high in the close. That's where momentum would start to shift back to the upside here on that particular read. And again, it is a single drive of bearish divergence. Yes, is there other drives of bearish divergence in this structure? Of course, but what the more relevant drives are going to be within the trend. And we now have our first bearish divergence drive between the high at 73,835 and the new all-time high at that 109,360 or so. All right, so let's go ahead and take a look at the weekly here. We'll work our way down to the daily. So I've been mentioning this, and there's some who have maybe this isn't their style of technical analysis. We did have a daily compression and then we're in an expansion to the downside for price action. But in the context of the weekly, we have a little bit of a wider berth. We went from compression to expansion here on the weekly for the Bollinger Bands. In terms of volatility, this was a very, very, very volatile move up. And now we've moved down to hit that lower first. We did talk about this earlier this week. And this is bands moving from expansion to compression. And as I had mentioned on Wednesday, as I mentioned on Monday, and I even mentioned last week, and then especially on Monday with the update for the closures, when you're moving from expansion to compression, initially lower first, second, and third will act as support areas or interesting zones for confluence, right? This is all confluence. You can't just take them in and of themselves. You know, we're working off trend, support and resistance, volatility, and momentum. But in this case, when the bands are back into a compression phase, you're going to get usually pretty strong support, at least in lower term timeframes, at the lower first, lower second. If we start to see closures below the lower second, then we'd initiate expansion further down. You will see expansion or the volatility as it relates to the bands start to increase, but expansion won't actually kick off in earnest until we see closures below the lower second. So these two areas to the downside are very, very important. Lower second just below $70,000, coming in at $69,000. So basically the prior cycle highs, right? And then, of course, to the upside, overhead resistance upon initial first passes, and then we check on it. We want to also see close over close below the lower second. So one closure is not usually good enough. We want to see an additional closure and monitor that on the lower term timeframes for expansion down further if we do get closes below the lower second. Same for the upside here, you know, above the upper first, typically first pass, you know, basis, obviously, that is our 20 simple up there at 91.7. By the way, if price continues to rise, this is going to be at $92,000 this week. If price does rise coming into Sunday, you'll see why that's important. Obviously, for those that watch a lot of my content, you know that $92,000 to around 88,700 was the primary support zone that Bitcoin just fell out of and got daily highly volatile expansion, like distribution structure style, down to the 80 and slightly under level. Now above there, we'd be looking for that 102,800 by the upper first. Anywhere above there, the all-time high and higher, we have 113. If price started to move more aggressively, these numbers would change, but we're so close to the weekend. Bitcoin's not necessarily in a position to threaten those areas, although weirder things have happened, so we should be aware of them, but they would adjust. If Bitcoin passes the basis band, we're likely to see the upper first around 103. And the upper second would be closer to like 114, 115. And then we've got the upper third up there at $125,000. Now, still initial resistances because this is going into a compression. It is not yet showing signs that it would be going into an expansion, and it'd actually be a little bit harder to get that expansion coming into support if it did head down towards that 70, because it's primary support, you know, between essentially 68,250 to 73,835 over here, right? So realistically, we're looking at this area, which I believe I marked out on Monday and Wednesday's videos. Let's go ahead and get the right tools here. So in this case, you know, we'd be looking at that as kind of the zone bracketing the lower second. If we did get closes below, that would be expansion and confirmation of expansion down further into this structure. And of course, if the high side's taken out, you work support and resistance from highs to lows. So from the high side to then the lows. So we have, you know, major low right here at what? 62,800 with that lower low, or that higher low wick rather, coming in at 58.8, which is a big monthly level, quarterly level that we had from prior cycle. So that is to say that could things get worse from here to the downside? Absolutely. But it would be headed right back into key areas of support. And I wouldn't be concerned unless we saw $49,000 lost in. I'm going to show you why I do believe that that's not in the cards as it stands right now. But the picture could develop a different way over time. It's just not a viable target for me right now. More accurate target is kind of right where things are kind of bouncing and trying to recover. We'll see, and we'll talk about this in just a second, but possibly any rejections off of this range if it does test back up. Any bearish retest and then head back down kind of thing, then this, you know, that might happen first. Or if it regains that range, it tries to go back into range, and this becomes a bit of a extended bull flag, I guess, for pattern traders, of which I am not. Daily. Let's get into the daily here. So for the daily, we see this full expansion to the downside. Now, I do want to point out a few things here. One, I'd want to see bullish divergence start to build, but it needs to set a low first in order to even, it needs to set a low and bounce Could we see that over the weekend? Maybe. We're still in full volatility expansion coming into the weekend price action. So if the Saturday candle kind of closes like this and closes up or green or holds the low, somewhere around the $80,000 region, maybe even 78, you can take that 78 as kind of the main criteria. Close below is continuation, right? To mid 70s likely, and maybe even mid to lower 70s, hitting that prior range below on the high side. In this case, I'm watching volatility pretty carefully here because it's still in an expansive posture. If we start to see Bitcoin close, which, by the way, we usually work trend. This is a downtrend, pretty obviously, but we need to see a low closed, and you will get signals that a low is likely to be in on closes above yesterday's high. I believe we can go ahead and take a look at it. Technically the low, yeah, it's not going to paint a low for that. So more realistically, it's going to be around $87,000 up here. So this would be Thursday's high. See closes above there. Low will likely paint. Obviously, any kind of green candle is going to paint the swing low, but we're looking for a closing low. Likely going to see that paint on the chart above $87,000. I would say that bulls would prefer to see it above the lower first, where the Wednesday candle, that big breakdown candle, came in. So that is kind of the criteria that I'd be looking for. Yes, you could take 87,000. That would set a closing low. Any kind of green candle from here above yesterday's high will set the swing low. But we need to see a closing low. As it stands right now for the Saturday candle, and even, on Sunday, I would say you'd prefer to see closes above 88,500, and more preferably in the range at 88,700, just above, because there is resistance right there. So let's go ahead and turn on support and resistance. And that's our local support and resistance zones that we've been talking about for a very long time. Just so happens to be right there where that close open came in, right? We had the breakdown from the range on a close on full expansion, indicating that, 87 to 85 was going to get hit over here. We saw that. We then saw, subsequently Thursday and Friday reject the $85,000 area, even while trading above. And in this case, we're looking for a low to be set and the red zone, or the range lows, that big support area, to be regained. That would start to look good to at least test to $92,000. So above $92,000 is where you want to see closes, bulls. This is where you want to see daily closes. And then from there, what you would want to see is this area being held, preferably staying in the range. If it did head back down, and fail to close above $92,000, that would be not so great. Obviously, another lower high, and then the criteria would be is we hold this last low at 78 to try and put in higher low to equal low structure, and in that case, we come back to it. But I'll be honest, with the full expansion that's going down here, and the fact that it's maybe the weekend being lower volatility could kind of save this outlook here. But in this case, there's a few scenarios. Let's say it puts in a low here, right? And it comes up and it hits the bottom side here by the lower first, and then you have a lower high and then continuation of trend, back lower. Bulls don't want to find this zone as resistance. They want to be able to get into the zone and then eventually start closing back above it and trying to hold it. What I will say is that if this does bounce substantially and set the low, wherever it puts in a lower high, whether it's at the bottom side of this zone, finds this zone as resistance, or right here at the daily basis band, which is at the prior weekly higher low, on a closing basis, the prior weekly higher low on a wick basis is this guy over here at $89,000. But if it were to find resistance, likely what's going to happen is we need to see a lower high, and then we need to see this low hold no matter what. bulls would prefer to see closes back above 92, right? So wherever the next lower high comes in, what bulls want to see is this low hold on a swing, preferably on a close open here at right around 84. It's 84,000 or so. Then there's a chance to try to change trend on the daily. Otherwise, if it comes back up and bearishly retests this area, even up to that weekly higher low close, it's likely going to head down further. Very highly likely that it's going to head down to that main area down here, 73,835. And there's areas of interest. You can get more. We might even refine this as we get there to that 68 or so, top side of the range, at least initially. We can always refine it should price start breaking down towards that area. But we just happen to have Bitcoin positioned in terms of its band setup during this expansion phase on the daily, again, into the weekly Bollinger Band compression phase, is going to be at the major levels, right? We have the lower first right at the bottom side of the range that was just lost. And then we have the basis right at the weekly higher low on a closing basis. So while it would be good to regain this zone, we need to see, no matter what, wherever the next lower high is, we need to see this low close if we're bullish. Otherwise, it is continuation. So, I might as well say where would this break trend? Right now, we got to see Bitcoin trade back up to 99,500 or so to break the trend on a closing basis. So, little steps. Move is still in progress technically, but we can see that the move is slowing down. Bitcoin has gotten its close, although it did close the Friday candle below the lower second. Lower second has passed price, and it has used it as support to trade back above this daily emergency wick low from the expansion up at that $85,000. 87,350 or so is an area of interest on the close opens. Big order block candle in there. So just beware of bounces up after setting a low. You don't want to see it just set a low and then immediately set like a lower high swing and then boom down. That is something that we will watch carefully. And those are all just scenarios. I will tell you that bulls closing back above 92 is better than not. Gives it a better chance for possibly higher low equal low structure from there, and a reclaim of the range that it just lost, making it a big old deviation. But it's still a move in progress, and we don't fade moves in progress. Let's see, for the daily momentum here, where would this turn back up? It closes above 81,900, so basically $82,000. And we will see a momentum shift on the daily stochastic momentum indicator. I'm wondering what the 2-day looks like. Yeah, it's down 85,860. That is going to be closing with the Saturday candle, in fact. So back above essentially $86,000. This would get an initial cross. Doesn't mean much. We need to see follow through on the next one. So we'll definitely talk about it on Monday. Reclaim of the lower second. Where's the lower first? Yeah, lower first is right around that $91,500 to $92,000 that would need to be regained. This is expansion on the 2-day. It is expansion on the 3-day. Lower first is right at 92, rejecting the lower second as it stands. This is going to close with the Saturday candle. What about momentum? So about 90,000. So it needs to get back in that red range. Let's look at the 4-day. 4-day is kicking off full expansion, closes back above essentially 89,700. So again, $90,000 kind of being the pivot there. Could easily reverse off of this area. Got to regain that lower second at the 87,400, which is, and then go reclaim the red zone. That would look really good. 5 days going to be downside expansion. Closes below $96,000. Also closing with Saturday. So we've got major time frames kicking off expansion into that weekly compression. What does that mean? For right now, depending on where Bitcoin closes this Sunday, it's going to look more like at minimum a retest of the lower first standard deviation, and might start to paint the picture of retesting the actual low to the lower second standard deviation for a retest of this area. Is basically what those medium-term timeframes between the daily and weekly are saying. And then we come back to it if it were to do that. That doesn't necessarily mean it has to go test those areas, though. I would actually watch very closely the way the weekly closes. And if it does start to make some headway or set a low coming into Monday, the Monday session is going to be the main one to watch. And then we kind of, play it by ear. It's still expansion, can't fade expansion and move in progress until the move in progress is over. What we're going to try to gauge is, does the move in progress get that continuation over the weekend or not? Because if it doesn't, it actually does give the bulls a chance to try to set a low. Of course, it's a lower low. But at least it would give the bulls a chance to try to push price higher for some retests to see if they're going to be bearish retests or if the bulls can reclaim some of those areas. So that's what we're going to watch over the weekend. And I'm going to leave you with that. I'll talk to you again on Monday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care. Have a great weekend.